Hi, good evening, everyone. I can see you all joining in. So we are waiting for a few more friends to join in, and then we'll be beginning with the webinar. And we'll begin at sharp 7 p.m. Well, I can see most of you have already joined in. So we'll be beginning with the webinar. So a very good evening, everyone. Thank you so much for joining us today. My name is Mahima Lal, and I'm the part of the engagement marketing team at Hero Wire, and I'll be host for the today's webinar. So I will be starting this webinar by telling you a little about the HeroWired platform. So HeroWired is a premium learn tech company, which is a part of the Hero Group. So HeroWired is on a mission to not only reimagine the way we learn, but also build a better and a brighter future. We equip our learners to know, with the right skill set, the right knowledge, and the expertise that they need in order to find success. So as you all can see on your screens, today we are presenting a webinar on the topics, key tips and tricks to land your dream job into financial analysis, valuation, and risk management. And in order to present this topic in front of us, we have Deepika Pardasani with us. Welcome, Deepika.
Thanks, Mahima.
Deepika, I can't see you.
Thanks, Mahima.
Can you try switching on your camera once again?
The camera is already on. Let me turn it off.
Pratik, can you see Deepika?
No, I think even I can't see Deepika, I think.
I mean, it's already turned on. What am I supposed to do?
You can try rejoining us.
Okay.
Yeah.
So let me drop out and drop in again.
Sure. So Deepika will be right back with us. Meanwhile, I'll be introducing Pratik with everyone. So Pratik is here as a subject matter expert with us. So he will be helping you out with the program that is offered by HeroWired into financial analysis and risk valuation and risk management. And we have Deepika with us now. So a small introduction about Deepika. Deepika is an experienced investment professional with 10 plus years of experience in asset management and financial services. She is an IIT Bombay graduate in chemical engineering and pursued master's in science degree from Columbia University. Deepika has worked in New York and Singapore and is involved with the Columbia venture community to judge these startups. A very welcome, Deepika.
Thanks, Mahima.
So as you all know that we are in a webinar setup and you won't be able to switch on your mics and your cameras. So we have a chat box and a Q&A section open for you. So in case you have any questions or queries regarding this webinar or regarding our program, please feel free to put down your questions into the chat box or in the Q&A section and we'll be happy to take all of them. So I guess without any further ado, over to you, Deepika. You can share your screen now.
Right. Assuming you all can see the screen now. So thanks, Mahima, for the introduction. I want to first of all ease you all in for this webinar session because it's meant to be very introductory and let's try to keep it as interactive as possible. So at any point in time, there are any questions, please drop in at the Q&A session. And if any of the jargon and any of the keywords that are, you're not able to follow, just don't worry about them. Like sometimes for the loss of any other simpler words, we have to use those words, but this is meant to be like a super light, super easy, like purely introductory type of a session. So just I know that sometimes when I was, and I'm saying these things because this comes from experience, that when I was starting out in finance and some of the things I was not able to follow, I know that it can feel overwhelming. And now that I'm 10 years, 12 years on the other side, 15 years on the other side of this table, then I want to tell you that you should not be overwhelmed by it, and eventually you will really start liking it. So don't. The point is not to pay attention to definitions or anything else. Just trying to give you a real picture of what the financial world looks like. So finance, for this particular topic, we are trying to talk specifically about the careers market and what are the tricks and tricks to getting a job within financial services industry. So when I think about financial services, I consider it's in not just in India, but any country you go around the world, it is actually one of the most central macroeconomic sector. So people consider it. Why? Because it is It is almost like a backbone sector that funnels funding and other financial services such as IPOs, shares and tradings, etc., across all other sectors. So this is not like your hotels or like your say telecom or something else that is not linked to other sectors of the economy. It's actually literally linked to all other sectors of the economy, which is why financial services is considered like a backbone, very central macroeconomic sector. So anything that hits the banks ultimately will trickle down and trickle down to other sectors of the economy. So this is one sector that doesn't operate in isolation. Having said that, how is it structured and in which part of financial services one can potentially see a fit for themselves? It can be a big web to navigate, and my purpose of today's conversation is to try and give you a very real picture of what it looks like. And before we get there, let's try and understand what is financial analysis and valuation. This is just like very simple definitions, again, not to meant to like try to, don't get caught up in words here. So when we say financial analysis within the context of financial services, like in the form of a job, generally they use financial statements. There are 3-4 types of financial statements that are used to say review a company's or any instrument when you get into this this sector. Like there are derivative instruments and so on and so forth. So it is trying to study what historically has happened, like most parts of research, like most parts of studying any other field, that it tries to study what has happened in the future and trying what has happened in the past and trying to predict and trying to forecast something that might happen in the future, and based on that assess whether it is worthy of certain credit or not, whether that credit is coming from an investor, like quote unquote say a VC or a bank or a lender, or whether it is coming from retail investors in the form of just normal market participants buying some shares and selling some shares. So from where that capital is coming is less important, but the whole concept of financial analysis is that you have to study the past in order to come up with the direction for future. Now valuation is a very specific word of that financial analysis that is conducted, saying that it tries to estimate a value. Now you are doing some financial analysis, but ultimately you have to quantify that in some way, and you have to say when there are say 2-3 companies or 2-3 assets or 2-3 instruments that are of similar nature, when I have 3-4 similar companies, all of them are say working in in steel industry, and I have 3 steel companies, now I want to compare those. That's where you need to quantify your financial analysis. It's not just like a PhD thesis that I put a lot of papers and documents on my boss's table, and like I've done the analysis. So analysis is not enough unless it can be quantified in some way. So valuation is just that term to estimate it in some sort of a quantitative format. How we estimate it, either we estimate again based on completely past history and then trying to predict what is valuable in the future, or comparing it with peers. There are many, how we do the valuation, there are many different methodologies, but the whole purpose of valuation is to quantify your analysis so as to be able to compare to similar companies or assets or instruments at the time of selection. So that is the simple understanding of financial analysis and valuation. Now, risk management is just one step further and one step deeper into this analysis, is that you have to identify as an investor or as a market participant what sort of risk is this particular company exposed to, and what is the sensitivity to those risks. The risk management is a process that just defines these tolerance levels, and whenever these tolerance levels are breached, and they continuously monitor it, and whenever these tolerance levels are breached, that's when they know that okay, something needs to be done, and some of further controls need to be put into this company or into this asset so as to prevent financial loss. That process, this is a big field in itself, very very relevant in the Indian context. The Indian market has a lot of risk management related jobs. So risk, that's why we also include in our introduction the concept of risk management. So these is just to explain to you what financial analysis actually means and what what risk management, how risk management ties up to that. So risk management is different from valuation in the sense that risk management is not trying to value how much something should be worth or what should it be priced at, but they are saying that once something is priced, what could make that price go up or go down, and especially what could make it go down, what could happen, like in 2008 and 2007 there was a huge global financial crisis, and people were trying to study where was the trigger, how could we have known that this big crisis is coming, and how can we prevent it. So it's once something is priced, they are trying to see what could lead to a loss of value. So this is the slight difference. So risk management comes slightly after something is pricing in, and when you're trying to invest in something for the first time. Now, in terms of careers, coming back to careers is where we want to focus our discussion for today. The three different avenues, like in any economy, there are three participants. There is the government, there are the manufacturers, and then there are the consumers. So these are the three players in any different economy for any sector. So the same applies to financial services sector. You can get a job directly in investment banks or the bank, the financial services industry, I would say. This industry is divided into two parts, the sell side and the buy side, and I'll talk about those shortly. The other avenue of jobs that comes from the government roles. So when I say government, the apex of that jobs is, say, somebody like if you have the ambition to become the governor of the RBI. So, or you want to be somebody involved in planning the Niti Aayog, or you want to be the advisor to the PMO office. These are roles that are government level roles, very, very highly qualified, most often. Like, and if I want to give you an analogy with United States, then if you want to be, say, at the top of the Federal Reserve. So currently, like when Janet Yellen was there, she's actually a PhD from Yale. So generally speaking, these roles, the government roles, they normally need slightly higher degrees, such as a PhD, but it's not necessarily a rule to say. But even like people like P. Raghuram Rajan, for example, those are people who are highly accomplished in their jobs and have done and studied their subject for many, many years, so as to be able to give country level advice on these topics. That is one of the ways, one of the avenues in which you could potentially find a job to get into government level and government financial roles. The third one is the corporate organizations. When I say corporate organizations, I mean the organizations that are not a part of the financial services. So for example, the easiest example is, because a lot of startups are coming up. So if you want to become the CFO, the chief financial officer of any organization, that is one of the corporate roles. So each organization, each company, whether it's a Boeing, whether it's an engineering, whether it's Asian Paints, doesn't matter. They will all have a corporate finance department within them. The job is to clearly maintain the finances of the company, clearly understand what those finances is, and then report those finances to the necessary regulatory bodies like the SEBI, like the exchange, where their shares are listed, like their shareholders. They have to keep reporting these results, financial results, and maintain these results so as to, when there is a meeting, they can have the proper corporate budgeting and so on and so forth, where the assets are going. So that is another big role of careers that people do pursue. What we will focus our discussion is a lot on the first point. So let me explain to you what is sell side and what is buy side. So when we talk of the financial services industries, the buy side actually refers to the actual investors. These are like hedge funds. These are like private asset management firms, like large sovereign wealth funds, and so on and so forth. These are also in like private equity and venture capital funds. So these are people who have the capital and they're going to, spend that money in order to own some assets. The sell side, where again we will talk about a little bit more in detail, is in some ways the counterparties that are providing financial services. These are different from the buy-side organizations. So let me talk about the sell side in a little more detail. So when I say investment banking, or when I say the sell side, this chart is what I'm referring to, or what most people, when you talk to them, they will be referring to. Here, when I, under the investment banking, when you see the private and public, this is different from the private and public markets. It actually refers to what sort of clients the bank is dealing with. So let's talk about the private side first. So when we are talking about private side, a huge portion of the banks is involved in private services such as private banking. So private banking you will not find in all banks, only in large banks. Generally, these are services for high net individuals and so on and so forth, and more one-on-one corporate level banking. M&A, as I'm sure you must have heard, it's a very exciting role, very rewarding role.
Deepika, I'm really sorry to interrupt you. Can you just slightly shift your slide up, as it is being covered with this box up here? Right, it's perfect now.
Okay, yes. Thanks, Mahima. So when you say M&A, it stands for mergers and acquisitions, and again, the investment bank is providing the services both to the buyers. So there is a company that is being acquired, and there is a company that is acquiring another, either fully or partially. So mergers and acquisitions are not necessarily on a full level. They can happen on a partial level also. So when these companies are being acquired, they take the help of investment banks, and investment banks actually charge fees from both the buyer and the seller. And just to give you some sense of how much is being charged by whom, at least in the United States, the annual fee flow, just the fee flow and not actual transactions of assets, is 25 billion annual. So mergers and acquisitions is a big department. And the other, exciting thing about this department is, generally speaking, again, it's not a rule, but in general practice, what I have observed in my years of experience is, generally speaking, the CEO is generally coming from either M&A or in one of the private departments. So if you have that ambition to become the CEO of the investment bank someday, maybe this is the way to go. The third most important along private markets is the capital markets. So capital markets are further divided into ECM, equity capital markets, and debt capital markets. This is different from the public and private, again, capital markets, but I put them in private because this is when the first time they are structuring instruments from them. So within ECM, the most important task is like something like an IPO. So the very first time when a company wants to go, for and raise public funds and public money, they can use the help of an investment bank. The debt capital markets, they try to structure some debts, they try to come up with structured products for the bank and try for their clients, and they try to raise capital with very selected terms and conditions, very selected times of maturity, very selected interest rate patterns, and so on and so forth. So this is like a very niche field in that sense, because it's catering to a very private client for a very specific purpose, raising capital for a very specific purpose. The other side, which interacts with the broader world, is divided into further 3 stages. That is research, trading, and sales. And that research, trading, and sales, although I put it only under research, is further applied to equity, fixed income, and commodities. So most people will have equity department, which is providing equity research. Fixed income, the FX or currency markets are actually very closely linked to the fixed income markets. So they are, almost tied up with the fixed income bench generally. And then not everybody doesn't have a commodity desk, but bigger banks, they do have a commodity research department, and they also have a macroeconomic research department, just to give like a broader feel. So when I say macro, I mean like when institutes like IMF are trying to predict and forecast the growth of GDP, etc., of a country, or on a regional level, like how much is Europe growing, and so on and so forth. So again, the trading desk will also be equity trading, fixed income, commodity, and sales will also be these three departments. But what do they do and how do they raise capital? So sales department is actually something that is very closely tied to the capital markets. So once capital markets is creating the products and establishing the products for their clients, the sales department is actually meant to distribute those products. So that is where the role of the sales comes. Now this sales is different from the M&A sales, because M&A people are trying to also look for clients and also look for private deals, etc. But those deals are one-on-one, corporate to corporate. This sales is looking for buy side clients such as hedge funds, etc., to be able to invest in those structured products or invest in those equity products. So that's the difference between the M&A deals and the outright sales deals. So sales department is distributing the products. The real fees that comes for this side of the section is coming from the trading department. So research in most of the banks is sort of offered as a friendly service to them, and this some of them do charge for proprietary research some fees, but most of them give research as a part of the services and actually charge for the trades that are flowing through the bank. So the trading fees is the fees that the banks do generate, and that is the source of revenue for the entire sister or this entire ecosystem of sales, trading, and research. Now, having said that, like if you have the knowledge of any of these things, just hop back into this slide, having experience or having knowledge or having some sort of exposure to any of these roles does not completely exclude you from other roles, so to say. So they are all brothers and sisters and cousins to each other. Like all of them will require certain skills that are common to them, all of them. And then over the years, of course, you build some expertise, you build some niche, and you become like a subject matter expert in one of them. But having said that, just on the onset of it, you can't say that if I know M&A, I can't do equity research, or if I know trading, I can't do structured products. That's not the case in the very beginning. Or if I have worked in a corporate finance role, I can't shift to a bank or to a government role. That's not the case. They are actually like quite similar, and like I said, just brothers, sisters, and cousins to each other in the very beginning. I know this chart looks a little complex, but I hope that you have followed it. And in light of that, let's try and talk about what are the skills needed to be able to do some of these jobs. When I was trying to think about the skills that are required to do all of these jobs that I just described to you, I would divide those skills into two parts. The one is like outright knowledge skill, like do you have the knowledge to be able to do it? And the second part is either soft skills or personality skills, whatever word you want to put there, you are free to use it. And on the right, I have tried to throw in some words, but of course, this is not a comprehensive list. There are many more adjectives you can use. What Hero can do for you is, and through this program, what we are aiming to do is to help and bridge the knowledge gap that you might have. So obviously for all of these roles, for all these different roles, there is some sort of basic maths. There are a lot of numbers involved when you're buying and selling and you're integrating and doing acquisitions and so on and so forth. So there is some sort of basic quantitative skill that is needed. There is some sort of basic corporate finance, because when I said that there is financial analysis involved, there is some sort of basic understanding of financial statements that is needed. So there is some sort of basic economics, whether it is microeconomics or macroeconomics, there's some sort of basic macroeconomics that is needed, or microeconomics that is needed. And then of course comes the equity research part, and the equity or the fixed income part that we do cover. So that's the actual job that you will be doing. So when I say when we are talking about skills, these are some of the knowledge skills that you do require, that basic quant skill, basic economic skill, basic finance skills, basic understanding of statements. And then what is the process of actually doing equity research, that is That is just the knowledge part. But I also want to talk about some of the soft skills that are needed in order to succeed in these roles. And that is a judgment I feel that each one has to take for themselves. Really, whether to understand which part of the ecosystem they best fit in. So when I talk about, just to go back to this flowchart again, when I'm looking at, say, M&A, and as I said that this is a role where you might, land up as a CEO someday. This requires a personality that is in the beginning very, very hardworking. These are the guys, when you think of when somebody in your brain tells you about 12 to 15 hours of work, actually this is this department. There are a lot of presentation skills you need, because there's a lot of pitch books that you will be creating, and then you will be presenting and pitching to your clients. And eventually, if you do climb up the ladder and get to that apex position of the CEO, you do need some management skills. So this is a role that will require you all of those multiple skills if you want to succeed in this career. Capital markets and research trading, they are slightly different. So let's talk about research first. So whether it is financial research or, for that matter, any kind of research, you need to have the ability to not only just dig deep into the detail, into the matter or into the subject, but also really have that detailed oriented attitude. So if you're not a detail oriented person, probably research is not the right fit. Also, in research, there needs to, what is very important is to have an independent opinion. So if you're not somebody who is not influenced by what is in the news and what everybody else is calling, maybe everybody else is saying that this stock is really awesome and everybody should buy it, but when you are doing your research, you are finding some loopholes. You need to go with your own research and own analysis. So having that ability to operate independently is quite important in a research role. When it comes to trading, you need to have those negotiation skills. You need to have those quick decision making skills, because you're trading, you're really negotiating and agreeing on a price, and you're buying and selling, literally how you would do in a fish market or a hawker market. So for those cases, you need those negotiation skills, and you need to be very, very quick and fast. A trading floor is very busy, very loud. So if you feel, if you're a person who needs, the silence of a library, a trading job is probably not for you. So I would also suggest that you should not only think about, okay, a way to fill up to bridge the knowledge gap, but also try to ask yourself, what sort of a personality am I and where would I best fit? Again, talking about sales, you need to be able to keep calling somebody, constantly. You need very strong communication skills to constantly keep in touch with them, keep calling them every week, every 2 weeks, and so on, and keep following up. So having that sort of service oriented and customer centricity is very important to be successful in a sales job. I've not put risk management here, but risk management, I would also not, in addition to the, having that independent opinion that, the traders are trading and they are managing their books and so on. But the risk management department looks at it and they say, this looks too risky. You got to put in some hedges. Risk management department needs to be very, very bold. You really need to be an outright bold individual to go even to the CEO of the company and say that, okay, some of the risks are not okay. I'm not agreeing with it. My risk monitors are flashing in red. So please, tone down some of the exposures that you have done. So those kind of personality skills are also needed on a daily basis to be able to succeed and be, shine in your, area of expertise and build that area of expertise over the years. Obviously, this list is not comprehensive, but I have tried to put some of the bubbles over here. That's something I feel is important when you're trying to study what careers, because for this presentation we want to introduce the careers and help you decide where you are you're going to be best fit, help you take that decision for yourself, where do you fit best, and then try and think what are the tricks to land up in the right job that you can sustain over a long period of time. Specifically, I want to talk about the graduates, because this question I get very often: what is the ratio between how to get in as a fresher versus how to get in as an experienced professional. So when financial services is talking about freshers, I'm trying to talk about people who are either straight out of college or straight out of MBA. So for specifically those two set of groups of people, there is a 2-year analyst program and 2-year associate program. So analyst program is for somebody straight out of college, and associate program is straight out of master's degree. These programs are generally what they do is that they rotate you along the different desks. So all of these desks that I've talked about, so they will put you on the research in equity, they will put you fixed income trading, they will put you in macroeconomics, they will put you in sales, and say for 2 years they will put you on 8 different different teams, and you can dip your feet into these different teams and work and lifestyles and life quality, and ask yourself, where am I enjoying the most, what am I willing to learn the most. Because once you decide that, okay, this is the path I want to pursue, you will have to dedicate initial 4-5 years of your life, just like you don't have a life for 2-3-4 years, and really deep dive into your subject, into your career, into your professional responsibilities in order to succeed and master what you have decided or what you have chosen for yourself. The MBA associate program is exactly the same version, but I think in that one they already sort of accept that given that you have a certain degree of exposure, or that you have studied a certain things in your MBA programs, they also try to put you in more desks than the analyst program. That's the exposure. Or sometimes they already sort of segregate, like this is a M&A MBA program, this is a capital markets MBA program. So they sort of filter it down instead of more, and within that they give you more time. For example, six months of each team exposure rather than 3 months in an analyst program. Aside from that, if you're like a total lateral hire, that you have had 10 years of work experience in any industry, in oil and gas, or in textile or something else, doesn't matter. For those things, generally speaking, consulting roles, even before investment banking roles, are the way to it. So all your McKinseys, BCGs, etc., they have like an experienced professional hiring. They have a knowledge team, and they try to hire you into those first research roles, so that they know because you are bringing in a lot of experience from your domain, whatever that domain may be. And those consulting teams, once you have worked there for 2 years, then you can move on to an investment banking role, generally starting with a research role, because in research roles, they expect you to have that knowledge. In case you're coming from sales roles, or in case you're coming from one of the people, your exposure roles, then you may aim for sales or M&A, where, if they feel that you are capable of bringing a deal, then you could directly get into those roles also. But generally speaking, and even for graduates, many a times I've seen that graduates are from college, like from IITs or elsewhere, they first get into a consulting role, which is actually quite helpful, because consulting, it gives them that practice of doing research, but also with little more applied mindset, not like academic research. So I think that's the best thing that consulting brings to the table. It gives you that problem solving attitude. So generally students would go to a consulting, BCG, McKinsey, or some other consulting for 2 years, then they would hop on to an investment banking role, which is, I've seen this happen very, very commonly. So generally speaking, if you're not directly getting hired as a graduate into an investment banking program, where you could rotate all the 8 desks, or where you could just, spend 1 year in M&A and 1 year in elsewhere, for that, the best foot in the door is generally the research department, because in research you have the time to actually read through everything and familiarize yourself with it, as opposed to say a sales role where you already should know everything and be able to pick up the phone and start talking, or a trading role where you should be able to know something enough to be able to negotiate and set a price on something. Again, all of these roles are just to set the right expectations. Like nowadays those golden salaries are gone, but still I would say it is a good lucrative career, and it is rewarding not only financially, it is also intellectually rewarding careers, because you all the time that you have spent studying and gathering the knowledge that we have talked about, you are actually trying to apply that. So both for graduates and experienced people, like if experienced people want to make a shift towards these roles, try to see if what you can bring to the table. Are you already coming from say a corporate finance department of an organization where you know and understand their statements and their financial health very well, you understand that industry very well, that is actually very welcome. Even I'll tell you, people, the big banks like Goldman Sachs, they even hire people from history departments, so as to it's not like always that you need to have a maths or quant or a statistics background to in order, or an economics background in order to work in a bank. They do hire people from history department because that helps them understand the political scenario, both historical and present political scenario. And political risk is actually one of the risks that even risk management tries to assess, because it can affect the currency and so on and so forth. So it is, I mean, there are many different avenues through which you can end up in one of these roles. All right, so just as introduction which Mahima already gave to you guys, that I've worked for many years abroad in the United States and in Southeast Asia, and I spent actually most of my time in on the buy side in asset management. And I feel that in India, the buy side is relatively smaller in terms of private equity and VCs only, but the sell side that I have tried to talk a lot more is bigger here. I myself worked as an equity research analyst. That was actually my first job in Southeast Asia. And that lot of those roles are currently in India. A lot of risk, I should also say, a lot of credit risk, equity risk related jobs. There are really a big abundance of those roles in India. And really, and Indian, I do feel that Indian mindsets, the way our schooling, etc., is done, we are like smart enough, intelligent enough to land up in one of those roles. All right, so at this stage, I'll stop the presentation and I will look for any questions that you may have had. Oh, there are 11 questions. So let me stop screen sharing and let me start. Okay, so let me start with Shrideep ji. Hi Deepika, hope you're well. Yes, I'm very well, thank you. I work as a senior product manager, senior consultant in a client-facing role in BFS sector. Okay, fantastic. And I'm contemplating on doing FRM. Okay, FRM is financial risk management, for those of you who don't know. But then came across this course. My question would be, how is it different from FRM, both from a value and outcome? Can FRM be considered at par with this? And what is your unbiased opinion? I think, to be very honest, Sarkarji, is FRM is specifically targeted for risk management roles, whereas this particular course is slightly more broad-based compared to FRM. So what we will be teaching is equity research. We'll be teaching a little bit of derivatives like options and so on and so forth. So if you're looking for, say, specifically, I would say, because you're trying to ask me for an outcome, the outcome is actually is what you are aiming for, right? It depends on what you are aiming for. So if you're aiming for a risk management role, which I try to talk about, which say it's trying to assess how much risk a trading desk is taking, that's the kind of certification that FRM would go. But if you're looking for something that can give you equity research, and then hopefully someday shift you to become a trader with experience, that then the course is much more broad based as opposed to FRM, which targets only risk management. Okay, I hope that answers your question. Okay, Kaushik, Siddharth, how about wealth management? Good question. So wealth management again is Kaushik ji is considered to be like a private service. So many like Morgan Stanley Wealth Management, etc., they do cater these services for high net worth individuals. So they technically it falls under the department, the same department as M&A and private banking comes, but sometimes they create Chinese walls to just to segregate and have no conflict of interest and so on. So if their stock is being traded through the same bank. If what I mean. So sometimes they do try to have Chinese walls around wealth management. But again, wealth management is a good, rewarding career. When we are talking wealth management, there is a lot of tax management also. Because when you think about, high net worth individual, a lot of them, especially in the US, they are losing a lot of money on inheritance tax. Just by inheriting something they're losing, or they just something because, and even in India the taxes are very high, 30-40% for rich people also. So a big part of high net worth wealth management is tax management. So if you're familiar with tax laws and things like that, that comes in very handy in a wealth management role. Okay, all right, next question. I hope that answers. That's what you were looking for, Siddharth. Okay, what are the working hours in investment banking? Sagnik Sarkarji. So again, depends on how much you're willing to put in. If I'm your boss, so again, just to give you the sense, your career is in your hands. I truly believe that. So if you are at a stage in life where you can put in 12-15 hours, your team will really love it. But if you are at a stage in life where you say, suppose if somebody is say a recent mother or something like that, companies do understand it. You could take a slower pace. It's just that you have to be okay that your colleagues at par are moving, are getting promoted faster. When you feel, you got to, in order, say, if I say equity research, what you need to achieve is that you should have a complete subject matter expertise on that company, on that sector. How long are you going to take in order to achieve that? That depends on you. Some people can achieve it in 1 year. Some people can take 3 years to achieve it. So it's your self-paced, and nobody minds it actually. As much as people see that, there is I mean, the 2 years, when I say 2-year program, that's just a guideline. That's not like hard and fast, unless it's the 2-year graduate program. But generally speaking, 2 years you are analyst, 2 years you are associate, and then you keep climbing the ladder. But still, just to give you a proper answer, generally speaking, 7 to 7 or 7 to 5, at least 10 to 12 hours in the initial days, everybody works. If you want to go slower, have a conversation with your boss and explain to them why you want to go slower. Or if your simple reason is that I want to have work-life balance, that is fine. But just make your team aware of it, and once you're aware of it, once they are aware of it, and they will see from the team side, you have a milestone to achieve, that I cannot promote you, or I cannot put you in front of clients unless and until you master XYZ. So once you have mastered XYZ, only then you will be put in front of clients. So it just set that one-on-one with your team and with your boss is what my advice is. Okay. Next question, anonymous. Dear madam, I am now studying for masters in finance in France. Very nice. I desire a position in M&A. Very good. What should a person include on his resume if he applies for jobs in investment banks? So for you, if you're already doing a master's, use your careers and placement cells to the fullest. Use them, ask them, and also if there is some professor who can give you a recommendation. Generally in France and Europe, they have a very strong tie-up with the universities. So if you're in NCR, I don't know in which college you are, but whichever college, they generally have a very strong tie-up with all these industries. Try to get the internship first. Intern is a big thing in Europe. So try to get so when you're in France, say BNP Paribas, Ocgen, these banks are big banks there. Try to get a foot in the door using internship, and then try to try to convert that into a full-time job. That's the way. What you should include on your resume, see, you have to be honest. You can't sort of misrepresent your resume, what you have studied, what you are what your MBA is, what your GPA is. If there are any past internships, past jobs, that you have to include. From skills point of view, you can say that hardworking, presentation skills, pitch book skills are extremely important. So if you don't have, try to get how to create pitch books, how to give presentations, and so on. Deal making skills, because ultimately M&A is an ability to make a deal. But again, you will be put in front of clients quite late, but your ability to express that in some form, like if there is a M&A club in your college or in your master's program, try to join that club. So try to put in some extra currics also. They will try to see, like, if you're a member of some sports, then you have some contacts and so on and so forth. But most important, I would say, do emphasize on presentation and pitch book skills also, because that's a big part of the job. All right, so I hope that answers. Okay, Savan Krishnanji, with regards to building models, how many adjustments are required on annual report figures? Good question, Savanji. Actually, the models that we used, they use quarterly reports, not annual reports. They do predict on financial year basis, so the predictions are on annual basis, but the reports that we are using are on every quarter basis. How many adjustments required? It depends on what the results are. Actually, there is no generalized answer for it. So I could, there are no adjustments to figures at all. So whatever data is being submitted, we use that data. We use that data to forecast, a year, and then say middle of the, if say 2 quarters have passed, middle of the year, you feel that, okay, it is looking good results and you want to revise your earnings. So this is known as earnings revisions models. And there is like it's a subject in itself where you revise the models. Then you could, revise the models and update it. So it happens often, but I mean, it's hard for, but it doesn't happen. Like, it's not unnecessarily just that the new report has come, so I have to revise my model. It doesn't happen that way. Unless and until there is a solid reason for me to shift away from the original prediction, I would not shift away from it. If there is a reason for me to shift either in favor or against from the original forecast or the original recommendation, only then I would shift. And it depends either on the company or sometimes just on the broad market. Like for COVID, if all the stocks are going down, then everything is going down. So then you have to revise the model, but it's not always that you revise the models. Okay, so it's that is very specific, and that's the job of the research analyst ultimately. That is one of the reasons why they are being paid so well. Okay, all right, but intelligent question. I really liked it. Okay, I hope that answers it. I'll move to Smita's question. Can you talk more on credit risk assessment, SILSCAD, and what kind of companies would hire such roles? Okay, so I'll answer what kind of companies. So CRESL in India is one of the biggest companies that hires people just to do credit risk assessment. Skill set is again very similar. Quantitative skills are very important in risk assessment because they are using second order level of risk that are being taken. So risk assessment roles are generally slightly more quantitative, so you do need some quant skills. It also requires your basic understanding of economics, because there's something known as liquidity, so you should be able to understand whether it is liquid enough or not. It's less heavy on I would say on financial statements and so on and so forth, slightly less heavy on those, but but basic understanding of corporate structure, capital structure, what credit is, somebody has given a loan to someone, what credit is, what maturity is, what duration is, these are different types of risk. So really that should be known. Now personality wise, what skill set is needed, the one which differs from the rest of them is the ability to challenge somebody, especially somebody in a position somewhat superior to you. So that's like a personality or a soft skill that you need in order to be a good risk manager. that's important. I would say less so on presentation, less so on negotiation, but again, your research and your detail oriented, in order to set the right tolerance. So the tolerance can be breached at any level, but your judgment, your discretion to set that right tolerance is what is needed here. So having that understanding and having that detailed oriented attitude to be able to set the right tolerance for the right product is the skill set that is needed, and that comes with experience and over time. I mean, that's not something that somebody can teach you. Okay, so I consider that answered. And then, okay, next question from Savanji. With regards to interviewing for a role, do they involve accounting knowledge or macro understanding on investing ideas themselves, or industry related or model related? Okay, this is very broad based question, Savanji. So depends on what role you're involving on. Generally speaking, they are not very heavy on the quant or accounting and so on and so forth. They do expect you to have basic understanding. Like if you're not able to even explain basic terms, probably that's not good, but they're generally not heavy on it. Yes, when you say investment idea, yes, whatever you are trying to present as an investment idea, be confident. Only talk about something that you can defend confidently in the interview. Don't try to, okay, now EV is in fashion, maybe let me just go and talk about EV. If you cannot confidently explain to them where the lithium mines are, where what are the, is it truly, like a lot of people are counter questioning, is it truly environmental friendly, and probably it is not. So don't go something just because it is in the limelight. You can go with your simple brick and mortar stock, or a simple building stock which has very few equipments and so on and so forth, but because you can explain that and defend that confidently, that is something you should do. Don't try to appear more knowledgeable than you are, but it's more important to be simple but confident about what you're saying. That's very important in an interview, I would say. And then I'll take your other question. Can you share with us the input on risk-free rate used in DCF and other models? Is RBI repo risk the risk-free, or how to factor in or adjust the global risk-free rate as it is now positive? So risk-free rates are the rates. So in these, for those of you who don't know, DCF is the discounted cash flow model. The risk-free rate is one of the inputs used in those models. What risk-free rate is in general, the concept is the rate at which the default won't occur, right? That's the whole concept. Like literally, what's the risk-free rate is the risk at which there is no risk or zero risk. Generally speaking, the government bonds or the government 3-month rate is considered the US, like in the US, the US 3-month T-bill. In India, the 3-month rate is used as risk-free. But you could set as because in DCF it is actually used as an assumption or an input to the model. You have to set this rate that because DCF is projecting over many years. Depends whether you're projecting for 50 years. Depends on what you're using as the terminal rate. And based on your understanding of the macroeconomic environment, do you expect like because of high inflation, there were people in India who were expecting a rise in rates, and the rates did increase a little bit, right? So you have to say and ask yourself, how far out in the future do you expect the rates to move? And then assume a number, like is it 10%, is it 7%, and so on. The RBI repo rates are in context of the derivatives actually. So don't confuse the two is what I would say. Okay. Just in the interest of time, I know we have a lot of questions, so let me go to maybe because there are too many. Mahima, what do you suggest? Should we move to Prateek's part first and then come back to these? And maybe Prateek can also take some questions.
Yes, we can go
Because
that way. Right, you can just catch a breath, and Prateek could talk about the program and could take some of the questions as well.
Yes.
Sure, definitely. I think that sounds a good
I
idea.
took some of your time.
No,
No
that's
worries,
okay. That's
no, not a
perfectly
problem.
fine, Deepika. And it was really insightful I think it's more important to answer the questions what the people are having. I think I'm clearly audible and there's no much background noise. Please,
Yes, Pratik, you're audible, and
yeah,
there's no
okay.
noise that is coming from behind
Okay,
you.
all right, sure. So definitely, like whatever Deepika has explained regarding the career, paths and whatever the opportunities are there in the market, right? Be it the consulting roles, be it the research roles or the advisory roles. We would definitely want to highlight one thing that industry requires the practical exposure and the skill sets. What we are, what the industry is looking for into these roles, and it is very imperative to understand at this point in time, like who is actually able to provide a well knitted program, which talks about all these aspects in a single a package, I would say, rather, right? So there are some of the people talked about some programs like FRM, they talked about, which are very specific, very narrowed down programs talking only on the risk management aspects. But we definitely at Hero Wired also have this program which considers candidates taking these opportunities. Like the program that we talked about is financial analysis, valuations, and risk management, right? Which is a bundle of all these three aspects, and then we definitely cover the derivatives market. We definitely cover the equity research side. We cover the risk management aspects. We cover the financial analysis and the corporate finance aspects, right? So all in all, it's a package, and a person who involves into this kind of a program, post completion of approximately 4 months into the program, he can actually choose a specialization where he gets into one of these roles and can do multiple projects around the same, right? So you can majorly bifurcate this program into 4 months and 2 months, where 2 months is more towards the practical exposure, the capstone projects, whatever we do, and the 4 months is about making you understand each and every module, the practical understanding of these modules, how a real business problem in the world is going to be solved by applying these concepts, whatever you are going to study in the program, right? So we not only this aspect, because all the faculties who are teaching you in the program are industry experts. For example, Deepika, she was talking to you guys for a long time. She's already a part of the program and taking modules around equity research and other aspects, right? So we have other faculties, and I'll just present my screen, because I think that will just give you a flavor of the program that we have. Just let me know, Maima, if you're able to see my screen.
Yes, Pratik, I can see your screen. Can you make it a full screen?
All right, sure. I'll just. Uh, is it better?
No, it hasn't changed.
Oh, it hasn't changed. Just let me check. I think. So is it visible? But I just
Yeah,
wanted to
it
know.
is visible. It is visible.
Okay. Okay. All right. Sure. So this program, like which we are talking about, the certificate program in financial analysis, valuations, and risk management, right? Which is definitely a program in collaboration with Columbia edX platform, because the entire curriculum that you guys study is designed by Columbia University, and which is definitely one of the top 10 universities of the world. I mean, it is a dream university for the finance professionals, and who better can tell you, about Columbia University, because Deepika herself has done one of the postgraduate programs from, I believe, Columbia University, right? So, this program talks about, as we were, discussing the aspects of financial analysis, valuations, and risk management, which is, as I said, a 6 months program. The USP is that the classes are live and interactive, which happens on the weekends, that is Saturdays and Sundays, right? So all these classes are taken by the industry experts, as I talked about, people who are already having 15 to 30 years of experience into the industry, right? So you get the deep industry connects, you get a lot of assignments, case studies, mini projects, and the capstone projects as well towards the end of the program. The idea is to bridge that gap which Deepika was talking about, which remains between the industry and the education platform, or whatever courses, degree programs that we do. So that is the idea, to bridge that skill gap, between academia and the industry, right? It is one of the things that we would want to talk about, that there's a placement assurance that we talk about into the program, which means we are actually providing you relevant 8 to 10 guaranteed job opportunities into the career outcomes that we have talked about, be it a financial analyst, be it a equity research analyst, or a bond trader for that matter, or maybe a treasury sales person, or a treasury manager kind of roles, right? So these are the career opportunities we definitely provide you. And within the program you get a lot of one-to-one career coaching with the kind of faculties you have interacted, the industry experts that we are talking about. You also get so the training on the soft skill aspects, what you speak, how you speak in front of the interviewer, how you negotiate with the recruiter, all those aspects is what we train you on. We actually work on your digital presence, your CV, your LinkedIn profile. These needs to be revamped so that you can get these kind of interview opportunities, because it's an AI world today. It's not the people who are finding your CVs, it's the algorithms they are finding your CVs, right? So all that kind of hand holding we do in the program, and then we take you to mock interview preparation, right? So faculties take your interviews and help you understand what kind of questions can be asked in the interview and how you answer those questions, right? Apart from this, yes, you are most welcome at Hero Wired, and you are a lifetime alumni at Hero Wired, wherein if in case in the future as well, let's say 6 months down the line, or maybe 1 year down the line, whatever opportunity you got, you are not maybe satisfied with that, and you want to get another opportunity, you can always come back to Hero Wired and access the VRISE portal that we have, and you can take any of the opportunities which is lying there, right? And then we definitely would want to talk about one other aspect, which is the NISM certification that we have. So there is this National Institute of Securities Market, which is a public trust established by SEBI. So they have certain certifications, and we also prepare you for clearing those certifications. However, like we enable you to take the examination. You clear that examination, and certification is given by NISM. But then we definitely prepare you about that aspect, right? So talking about the eligibility criteria, people who are having definitely a bachelor's degree, that recommended work experience is 0 to 5 years. However, if you have more than 5 years of experience, but you have mostly worked into the compliance roles, audit, accounting, taxation, transfer pricing, and you want to take a transition to these rewarding careers in finance, then definitely this would be the right kind of a program for you. Right. So curriculum, as Deepika has already talked about the same, whatever things you need to learn. So bond market valuations, the foreign exchange trading market, the credit market, talking about the credit analyst roles. The derivatives market is definitely what we covered, and also the corporate finance aspects, as I talked about, right? Apart from that, the risk and return aspects, and there are some technological equity research aspect and technological aspects as well, because today as a finance professional it is very important for you guys to have that edge over technology person, right? So you need to have at least some understanding of VBA, advanced Excel, SQL, tools like Power BI, Tableau. So that is also what we cover into the program, apart from the financial regulations. So financial regulations and the VBA, Power BI, SQL, all these aspects is what we cover, right? So definitely this is the kind of program that people are today looking for, and I think this is really important for you guys to understand that a specialization with a relevant skill set is what you need to be prepared for in order to get into these roles. Right. So I think this is what, Deepika, I wanted to cover regarding the program that we have. Maybe if we have any questions around the program, I will definitely take that. And in the interest of time, if you want to answer any of the questions regarding the the subject, so you can maybe talk about it.
Pratik, you can also refer to the Q&A section and the chat box if you would like to
Sure.
answer any of the questions.
Sure.
Meanwhile, Deepika, you can also take a look into the Q&A section.
Sure.
So I'll give Pratik 5 minutes to run through that, and if take that. And I
Yeah. So
also
Vijay. Yeah.
some
Yes. Sorry, Deepika, you're on mute, I believe.
I said there are some questions on the chat as well.
Right. So Mr. Vijay Joshi has a question. So that he's asking that will this a 6 months course on financial valuations, financial analysis, valuation, and risk management? How it will be? Uh, so and it's a 6 month course. So will that be good for me? Right. So see, definitely, we have had this course for approximately like 9 to 10 batches now. We have seen good number of transitions happening. People have taken this program, and the industry is really accepting the candidates because they are getting that practical skill sets which is really required to work in the industry. Right today, after doing a maybe a degree program, still people are struggling with those. They have the conceptual understanding, I don't deny that fact, but for the matter of fact, the practical exposure, the ability to quickly understand a real business problem and to implement the concepts and solve that for the business, that is what is still lacking. So that is definitely what we help you guys with, Mr. Vijay Joshi, and I think that is what you want, I think. Right. So I hope that answers the question. Uh, so someone is asking one question: is data analytics language necessary or an add-on? Do you use any of them other than the visualization tool? Could you please share your inputs? So definitely, Sawan, we are covering SQL, right? Analytics like Python and all, we are not as of now covering. We are covering advanced Excel, Visual Basic, because the macros is also a very important element. We are covering the SQL aspects and the tools like Power BI, which are the visualization tools. We have another program which actually talks into the financial analytics, quantitative trading, quantitative analysis, and those aspects where we are also, and that is a program which is the integrated program in finance and financial technology. So for the people who are coming from a STEM background, or who are coming from finance background and they want to get into the analytics side of finance world, so maybe quantitative analytics or maybe financial analytics, or for them we do have that program as well, which is a collaboration with MIT University. Again, I mean, it has its own brand, and it is one of the top 10, I mean, I would say top 5 universities of the world, right? So we do have a program there if you want to get into analytics, financial analytics for that side, right?
Pratik, we have a question from Amol here. Is there any specific age criteria that is required in order to pursue this program? And also if there is any particular background which is required?
So I think I've already covered the eligibility criteria. So Amol must have got the answer for the same. So, but like graduates with a background into high school mathematics, and then the most important criteria is you spending at least 12 to 15 hours a week to upskill yourself, right? So that is the hard work and the commitment that is definitely what is required. So yeah, I think that answers the questions. I think so. Deepika, there is one question there's from an anonymous attendee, which asks that are there enough M&A opportunities available in India?
Yes, definitely. Entire private banking and private equity type of jobs, aside from VCs, there's a big market in India. So when you're thinking of M&A, all the big banks, JP Morgan, Morgan Stanley, Deutsche Bank, they all are very active in India, and even the local Indian banks. In India, sometimes I should also tell you, because I know recently at Piramal, I think Piramal, before they acquired the DLF real estate, in I think it was a pharma deal or something. They didn't even, so just for the benefit of the rest of the class or rest of the attendees also, that M&A is not necessarily a service that a company needs. If your own corporate finance department is strong enough and understands their concept well enough, they can do the merger and acquisition. They can do the books themselves. You actually don't require the service of an external third party to do it for you. And a good example of it is one of the acquisition deals, one of the pharma deals, I think, that Piramal Enterprises did in India. So yes, in India, this particular, specifically this M&A type of opportunity, you can also experience as a part of the simply being a corporate finance within the finance department of an organization. But just speaking in terms of sell side banks, yes, all of them have this, and there are enough opportunities, more than enough, I would say. All right, so then Savan's more questions, a lot of questions. Savan, what type of certification would you recommend, which is also cost effective to open the doors for interviews, especially if the experienced professional with predominantly from back office and operations kind of roles? Again, like certification, like depends on what kind of roles you're seeking. If you're very sure and certain, like I just answered regarding FRM, if you're very sure and certain that you want to enter, say, risk management, and within risk management, credit risk, go ahead and take those certifications. But if you yourself are not sure as to what you're seeking, and in that case, a broad-based program like this Hero program that we are offering, where we are covering computer skills in terms of SQL, we are covering a little bit of macro, we are covering a little bit of quant skills, and we are teaching equity research. The broad-based certification is suffices. I mean, I guess you have to ask yourself this question as to what you're seeking before we can tell you what is the right course to take.
Pratik, we have a question here for you, Pratik. So there is Abhishek Pandey who is asking. He is currently working as a dealer in Kotak Securities, and I have experience near 2 years in dealing. Which role will be good for me if I join this program? He means to ask which role is good for him if you join this program.
So I think if Abhishek is working into the trading roles, I'm really not sure what he's actually. Okay, he's working as a dealer, right? So
Yes.
yeah, so equity research, I think, or maybe a treasury sales person, these kind of roles, or a bond trader for that matter. This would be a rewarding careers.
Yeah, depends. I agree with Pratik. Abhishek, what type of securities are you dealing? Like, if you're in bond, or are you in fixed income, or are you in equity? And from there, you can either join either the research or trading desk for either of these. So, I mean, sorry, Pratik, to.
No, that's perfectly what I wanted to tell. Right. So thanks for bringing that here. So obviously it depends on what he's working on currently. So I think we have another question from Jagan, who's a CA and now working in accounting profile. What would be the right shift, equity research or investment banking? Um, Again, it depends on your interest, Jagan. Like if you want to get into the research roles, then obviously equity research is a good option. Even an senior equity analyst at mutual fund houses is making something between 50 lakhs to 1 CR and above. It totally depends on the work experience, the exposure that you have got, right? So investment banking is, again, as Deepika has already clearly explained what the investment banking roles are. So it totally depends on your interest, Jagan, I believe.
Yeah, and Jagannath, just to add on to Pratik's answer, since you're a chartered accountant, I believe you must have worked a lot with statements, with income statements and so on and so forth. So it will be like, especially any kind of equity research role is very easy for you to slide into. If you want to shift away from doing statements, then you should aim for, say M&A and other structured products type of investment banking. But if you like what you do and just want to sort of climb another ladder on that, then equity research is probably easier to slide into. Okay, Aksha's question.
So, what are the things we need? If you can answer this, Deepika.
Okay, Akshay saying, what are the things we need to learn for M&A and for trading in IB? Okay, trading Akshay, very good question, because those two are very different roles, as I told you. So mergers and acquisitions, you need to learn something known as corporate finance. So you should know what company A does, what company B does and whether it makes sense to combine them or to split them in some ways. So unless and until you understand the structure of a company, which is corporate finance, and the capital structure, where how much debt, how much equity, who are the people running that company, whether the cultural philosophy of two companies matches or not, so on and so forth. Those are the things you need to understand. Also, you need to understand the industry, whether, am I marrying something that it is, makes sense for the future to come or not. So those are the things you need to understand for M&A. But corporate finance, maths wise, corporate finance, yes. For trading side, you need to know, you need to ask yourself whether it's equity, fixed income, commodity, what I would like to trade. And depending on that, you will be able to decide what. So, but again, just broadly speaking, negotiation skills, as I told you, quick number skills, quick decision making skills are very important for any kind of trading role. But for trading, I would say first ask yourself what instrument I would like to trade. And again, if you're young enough, I don't know how old you are, but if you're young enough, try to get onto that graduate 2-year program that I told you. So experience 2-3 trading days and then take an informed decision as to what you would like to do. Okay. Alok Yadav ji, I am a senior manager in the Bank of Baroda. I know we are out of our time, but we will try to still take these questions. Branch head as my CTC is this. My question is, what kind of scope in this field? I mean, since you're already in a bank, I'm not sure as to which direction do you want to move in. I feel like some of us would already see that this is the destination rather than a part. Alokji, please elaborate your question and we will come back to it. Okay, Swapnil Sakpan. So if you have 10, again, just to give you a more broader, easier, like general answer, if you already have 10 years of experience in your role, try to look for a consulting role in McKinsey BCG, where you can, from there, go on to like an IB role and you can get into deals and so on and so forth. But first try to get into a consulting role, I would say. Swapnil ji, I'm just having a graduate degree in commerce and after graduating got opportunity to work in capital markets domain, but in back office like disseminating NAV, very good. I have 8 years experience in this domain in mutual funds and hedge funds for US client. I've been working with BNY, State Street, SSC Globe, and now at Citco, which is hedge fund administrator. I'm highly confused which field to choose after this course, and does academic background is hurdle in getting jobs here enough? No, I mean, commerce is the right academic background. It is not at all an hurdle, and it is very relevant experience since you have worked in capital markets. Try to get onto either debt markets, structured products desk, or try to get onto the equity desk which issues the IPOs, because given your background, that is probably the nearest for you to slide into the front office. Okay, I hope, Swapnil, that's helpful. Nayonika Podar, I just cleared CFA level 3. Okay, very good. Congratulations. And want to secure a job as equity research analyst. So what are the absolute skills necessary apart from Excel? So VBA and all little bit of programming SQL skills are needed. And I mean, since you have already done CFA, I'm sure you're comfortable with the macroeconomics and financial statements. So you're almost there, basically. You're almost there. You just need to find the right interview. That's it. Okay, Srisha, I'm working as a senior credit analyst, very good, and want to move into equity research or debt markets. So if you're a credit analyst already, like which is research, you can try to move into the debt market trading desk. That will be better, I would say. So moving from debt to equity is quite a radical shift, Srisha ji. So probably aim for a trading desk, because once you have already worked as a credit analyst, you should aim for trading desk, and I mean generally very well paid and so on and so forth. So if I were you, I would set that aim little slightly higher and challenge yourself and get there. Okay. Anonymous Deepika, I have 1 year experience in insurance process. Very good. So for rest of you who don't know, insurance is also considered buy side, involving a little bit of financial process involved. Now I wish to move my career into the finance field. Technically, I am unsure how to get, because my graduation is in mechanical field. Don't worry about that. Mechanical is not a hurdle. Within finance, if you are still entering, try to get into that 2-year program. I don't know how old or where you are in. So if you are the same person who's doing the masters in France, try to get into the 2-year masters associate program that I told you. and then you will be able to decide what you like best. Okay. But insurance means you have some experience with the buy side. So that is definitely a positive on your resume for sure.
Deepika, as we're running out of time, we would take the last two questions and we'll be answering the remaining questions, and our team will be getting back to you, everyone, and they'll be helping you out with your answers. So Deepika,
Okay.
we'll be taking last two questions.
Okay, so let me see which one is probably the best one. Postgraduate economic. Okay, for Asima, since you want to re-enter the industry, the best places are again places like EY actually, where they're very helpful. So the EY, PwC, and right now Infosys also did, but Infosys is not in finance, unfortunately, where they are trying to help people like yourselves who want to come back to workforce after a gap of years. But EY, PwC, Deloitte, these are auditing companies. They are actually much more, welcoming in terms of people coming after a few years. Okay, I hope. How adapted to the market could you share, and so this is personal. Will this course be helpful in US finance also? Slightly, but not fully. So US, I mean, your basic equity research is yes, but there are a certain, regulatory things that apply only to the US. So I would say those are the two I would take. And I thought I saw one question on the chat that was good. We see we should have just under certain level. So, okay, Asima's question I've already answered. I'll take Pankil Shah's question. I have retail banking experience of 10 plus years in India and want to move in investment banking here in the US. What are the roles I can start with and how should I go with my learning? So Pankil ji, retail banking experience of 10 years in India is very different from investment banking in USA. So it's not like your Bank of America teller and you're doing exchanging some checks and giving out some cash. It's very different actually. So for USA, I would either take like a full-time certification like this one or like a full-time degree from Columbia or one of the programs there, and that's probably the right way to re-enter. The 10 plus years gap, age, all of that is not a hurdle. What is hurdle is that the retail banking here and retail investment banking there, it's like a very wide bridge to cover, and for that you really do need some like solid academic names and numbers on your resume to be able to bridge that. All right, I think Nimit Khanna, having 11 years of underwriting, knows how can my program help for further growth and relevant field. So underwriting roles is very, very good. So all your NPAs is basically underwriting roles. So try to look for those roles. So all your HDFC, all your ICICI, they all have NPAs. They have a desk that does this. So it is a subsection of any kind of CRESL, also any kind of risk analysis. So try to look for the desks that are doing NPAs, and that's probably the right way to go about it. Okay, I guess I'll stop. I took more than 2 questions, and I'll stop here.
So I can see a few questions are still remaining, but we'll make sure that our team is contacting you all and we'll be helping you out with all the answers to your questions. So this brings us to the end of this session. Thank you so much, Deepika, for sharing all the insights. And I hope that we have helped all our attendees and the learners with their questions, and they must have got a lot of answers to their queries. Thank you so much for Prateek for being here with us, for talking about the program. It was great to have you both on board for this webinar. And thank you so much, everyone, for being a lovely audience today.
Yeah, thanks for coordinating this, Mahima. Yeah, thank you. Thanks, Deepika. Thanks, guys. Yeah.
So everyone, we'll be seeing you again with yet another exciting webinar, and hope to see you again, everyone. Thank you so much for joining us today. A very good evening to everyone. Good night.
Good night.
All right, guys.